Now, as soon as I see a dive like this right away has my alarm bells going off saying there might be an opportunity here. All right, at heart, I'm a day trader and a swing trader. And when you get big drops into technical support, two-factor supports, that's where I'm going to step up and potentially go long.
Welcome back to Library of Wealth. Today, Gareth Soloway gives his updated prediction for Bitcoin as he closely monitors the crypto market as we approach the end of 2023. Starting in April, moving all the way through mid-June, Bitcoin has consistently reversed its course whenever it has tried to break out above the $30,000 mark. One notable instance occurred on July 13th, when the cryptocurrency surged to a one-year high above $31,800, following a favorable court ruling for XRP in the US Securities and Exchange Commission's case against Ripple. This surge was short-lived, as Bitcoin quickly retreated not just from the $31,000 level, but also dropped below $30,000 within a matter of hours. Within days, we saw a further dip below $29,000, signaling that the world's largest cryptocurrency has struggled to maintain continuous upward momentum, consistently experiencing sell-offs shortly after each attempt to move higher. At the time of recording, Bitcoin's price sits just below $29,400. Let's dive into the latest interview with Gareth Soloway, where he sheds light on the direction for Bitcoin, the market cycle, and the dynamics to keep an eye on with the Federal Reserve in the coming weeks. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
I do want to show you this one because, again, there's been a lot of talk how early on over the last couple years, inflation, and I even said this, inflation was low in Asia. All right, China wasn't seeing the same sort of inflation we were seeing over here, because over here we eat generally a different diet than those in Asia. What we can see here, folks, is you're starting to see this big move up now into 2023 of rice, which again is an inflationary signal. And what that's going to do is it's going to put more pressure on the Chinese government, more pressure on Japan to be careful and maybe not control that yield curve quite as much. And again, that is something that has to be looked at as a concerning factor. The other thing I want to bring to your attention here as well is this is business demand for bank loans, US versus Europe. My purpose of showing this to you guys is this. If we look at demand for bank loans, it has fallen off a cliff, okay? And if we look at that and we go back to 2008, we're approaching the same levels as loans demand in 2008, right? So that does have to raise your attention. You have to say, wait a minute, what does that mean? And the reason why this is important is if you look at what causes economic growth, it's money in the system. It's people taking out loans and using that to start businesses and create revenue streams, which then create taxes, which then create more jobs and jobs and jobs and jobs and things like that. And speaking of jobs, the last thing I'll say on this before we get into some chart action is if you looked at the latest jobs report, the non-farm payrolls report that came out, I think it was last Friday or so, what we saw was a gain of 187,000. But if you looked at the underbelly, and this is the big thing, folks, is like you can put lipstick on a pig, but it's still a pig. And my point here is that if you looked at the underbelly of that economic data that came out, the non-farm payrolls report, you would see that government jobs were a huge gain, but most other sectors, most private sectors were down. They cut jobs. And so again, you could argue that with the US getting this unlimited budget, right, the debt ceiling was raised to unlimited levels, they're now able to spend lots of money, which again goes into the idea of Bidenomics and, just saying, hey, we got to win this election next year. Let's spend. And that's the overall lipstick, right? That's the overall lipstick that we're seeing. But in the underbelly of the economy, in the private sector, things are changing. And again, this is something that raises my alarm bells. This is the 10-year. I want to just do a quick update on the 10-year. We have pulled back off of the highs. Now, interestingly enough, the pullback coinciding with the export and import news from China we got a couple days ago. And again, even Moody's saying, hey, listen, we might have to downgrade the big banks, right? So they downgraded a lot of the regional banks, but Moody's said, we're not going to downgrade the big banks, but they're on watch for a potential downgrade. And what that does is it tells us that even though you would think maybe yields would spike, but especially with the China news, it means that the global economy is weaker, which potentially has a pullback coming in yields because the Fed may have to lower sooner than thought, right? There could be a credit crisis. There could be multiple things that force that yield to the downside. Now, today we're basically flat on the yield. There's not a whole lot going on. Let's take a look at the dollar real quick. The Dixie. The dollar, again, a lot of people don't look into this, but the dollar is really, really important. And again, if we zoom out here on this chart, I'll show you guys the level that I've been showing. Right now, notice how the dollar's having a lot of a struggle or a lot of trouble getting back above that level. So if I zoom in, look at how many times it's hit the level and it's still not pushing through. That's because that is major resistance, what we would call a major technical trend line. Now, if it's able to stay here over time, it might be able to push up, which would be honestly a very big negative probably for risk assets, and likely, and this is what we saw, if you look at this move up here, which coincided with that data point from China, the export-import numbers, anytime there's fear, anytime there's chance of a global crisis, people are still going to run into the US dollar. The US dollar, even with de-dollarization starting and the BRICS countries talking about gold and let's back our currencies by gold, the dollar is still king dollar. That's the essence of it. Now, Bitcoin had a decent day yesterday, and the reason why it had a decent day is because of Moody's. So Moody's, again, downgraded banks yesterday and basically threatened to downgrade some of the bigger banks. And what we could see is as soon as that downgrade came out, Bitcoin started to pop up. And the reason this happened is the same reason why over here, this is where the bank crisis, where Silicon Valley Bank failed and these other big banks, these other medium regional banks failed, Bitcoin soared, okay? So what we're seeing here is a clear divergence. When you have the stock market selling because of economic woes or anything like that, Bitcoin still is a risk asset that goes down. Bitcoin will go up when we see credit issues. When there's issues in the banks, money flows from the banks into Bitcoin. That is a tremendously positive thing for Bitcoin in the longer term. Now, short term, again, I still think if we hit a recession and we start to see the stock market down 20%, assuming it's not a credit crisis, then I still think Bitcoin goes lower. But if it's a credit crisis, I actually think Bitcoin could end up breaking higher. So watch to see which angle this goes. Credit crisis or just regular run-of-your-mill recession, or maybe both. We'll have to see again how that plays out. But right now, again, you could argue that, again, maybe this is a little bit of a bullish tint to it. This is your trend line to watch. If it breaks this, I would be concerned with Bitcoin. As long as it holds above this blue line, I actually think Bitcoin's okay here. I don't have a problem with Bitcoin.
It's worth noting that the downturns in Bitcoin's value over the past few months have also proven to be temporary, as prices tend to rebound quickly whenever they dip below $29,000. Analysts are attributing the struggles to sustain rallies to several factors. One prominent reason is the cautious stance of many potential buyers who are waiting on the sidelines until there is more clarity regarding whether the US Securities and Exchange Commission will approve a spot Bitcoin ETF. The eagerly anticipated news from the SEC follows the filing of an application by financial giant BlackRock in mid-June. This move by BlackRock prompted several other traditional asset management companies to follow suit by submitting their own applications or revisiting previously denied ones. Soloway also points out the Federal Reserve's monitoring of evolving economic data, with the prospect of easing monetary policy measures if conditions remain favorable. Recent statements from regional Federal Reserve presidents indicate contemplation regarding concluding the rate hike trajectory. However, striking a balance between economic indicators and macroeconomic realities will be crucial for making these much-anticipated policy decisions. What do you think about the latest interview with Gareth Soloway? And what are your thoughts on his cautious optimism for Bitcoin's long-term trajectory and the next move by the Fed and the SEC? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.